Good morning. Welcome to Market Day Report. All right, time to kick off another week of trade. Now, we do have a few things working. Well, let's just throw out the headline. This one's a big one as the 30-year T-bill hit 5% overnight following a downgrade of the U.S. credit rating by Moody's. So that will be somewhat underscored throughout all of our markets today. Let's see how the corn market is trading in the overnight session. Now, corn moving higher, and this is following a lower trade on Friday. Actually, we've had a lower trade on corn for, 3 days, 4 days now? Corn market overnight, December up to at 437.5. From corn over to soybeans, and the soybean trade in the session on Friday finished lower except for the November contract, and November settled 3 higher in the overnight session, 1038.5. Let's go to the wheat market now. We'll start with Chicago, up 5 3/4, 530 3/4 in the overnight session. Hard red, what happened there? 8 1/4 higher, 524 3/4. Spring wheat, December is new crop, 611, settling at the high end of the trade range, up 4 3/4. And then the cotton market in New York, December at 68.38, up 71 points. Let's go to Springfield, Missouri. President, Midwest Market Solutions, Brian Hoops. All right, Brian, new week. What are you watching?
Hey, Tony, good morning. Hope everybody had a great weekend. Well, this is our last full trading week of the month as we have Memorial Day a week from today. So that'll give us a 3-day weekend coming up. But this week, not a lot of major reports. We have crop progress conditions report this afternoon, export inspections this morning. Friday is cattle on feed and cold storage reports. So it's going to be fairly light as far as any reports go. Now, this afternoon, we'll look for good to excellent ratings in that winter wheat belt to be steady at best, to maybe even decline 1 or 2%. It was a fairly dry week in a lot of the western parts of Oklahoma and Kansas, Texas, and it was fairly warm. So that crop could have went back just a little bit. And the forecast for this week doesn't really bode well for the improvement in ratings for next week when those ratings are released, as it's going to be same type of week. Wet across the central United States, that should help the corn and soybean crops, but also slow down the plantings. And we'll see corn planting maybe 70 to 75% done, soybeans 60 to 65% done, or somewhere close to that. That would be what we expect in this afternoon's report. So we're not looking for big strides because of the wet conditions, but if you have your crop in the ground, certainly the weather is looked at mostly beneficial. So that's likely to limit the upside here for the grains in early dealings. Now, the dollar's sharply lower this morning. That's given us some buying interest across the corn belt, in the corn, the beans, and the wheat. So almost all the entire grain room is benefiting from that lower dollar. You can see stock market down sharply, and that's spilled over into gold along with that weaker dollar. Gold market's moving higher when the stock market moves lower as money's flowing out of equities and into gold and silver.
Hey, Brian, we'll come back in a moment. We'll pick up the livestock markets, but I also want to talk a little more about this downgrade of the U.S. credit rating by Moody's. Now it means all 3 credit ratings have lowered that for the U.S. and what that could mean for commodities. So that's ahead. Hang on. We're back in a moment. Market Day Report continues after this. Cash trade last week, 219 to 220 in the South. And when you look at the North, 229 to 230. So $10 higher. And then go over to the dressed, 358 to 360. So that's how we wrapped up the week for cash trade. Again, cattle on feed report coming out on Friday. Live cattle futures, we finished the session on Friday higher. June up $1.05 to 12.22. And 90 higher on the August at 206.75. Feeder cattle on Friday, $1.77 higher on the August at 297.60. And then the hog trade on Friday, July, nickel higher, 104.17. Let's go back. Brian Hoops, Midwest Market Solutions. Thoughts on the proteins?
So last week, Packers increased their kill, a little surprising compared to the prior week. We're still about 23,000 head less than the year, but increased it from the prior week, and that should hurt our cutout values a little bit. Maybe this afternoon we'll see that lower values. Packer margins still deeply in the red, and they had to pay up for cash in some instances last week. A lot of the trade in the South was close to steady, and same thing on the dress basis, but there was some live trade that was at a couple dollars higher. So cash market's called steady to a little bit better again this week. Kind of depends on what the Packers do with their slaughter pace. Next week they'll definitely slow the slaughter down with Memorial Day, but this week we'll see if they want to keep that pace. It's going to be under 600,000 head and likely be in that 570 to 575 range, which means the cutout value should find some support off of those slaughter numbers, and that's probably the best thing we can say about the cattle market right now. Technicals are a little negative, but the fundamentals remain supportive. Numbers are going to be tight and continue to remain tight with the cutouts higher. Weights are coming down. So good news as far as fundamentals go for the cattle complex. It's just that technicals are very negative. We have a small bounce on Friday. It looks like we might want to extend that on the opening this morning, but from there, if we take out Friday's highs, I imagine we'll see funds start to pile into that market once again.
Okay, and then I mentioned this credit rating by Moody's downgraded. They're downgrading the U.S. now. That means all three credit rating systems have done that. What could that mean for commodities?
So what's happening is Moody's increased or downgraded the credit rating. First time in history they put it in this category. So we saw a big sell-off in the equity markets, and there's concerns that this is going to continue to weigh on the overall economy. We have treasury yields on the rise. That means interest rates are also increasing. That's usually negative for the economy longer term, and specifically for farmers out there watching. That means any variable interest rates on your loans probably going to increase in the next several weeks. So that's also negative for the farm economy. A lower dollar usually a benefit to the commodity markets, and if we can see that dollar continue to move lower like it has been, that should be a boon for our exports. We've seen corn exports be very, very strong. Wheat exports for that new crop marking year, very strong as well. And even soybeans have held in there surprisingly well, given the big crop that's being harvested in Argentina and in Brazil this winter.
All right, Brian Hoops, Midwest Market Solutions in Springfield, Missouri.